Hello, everybody. Welcome to the webinar today. Looking forward to our session as always. I apologize for starting just a little bit late. Hopefully we'll get a few more people coming in as we get things rolling. Real quickly, let's just go ahead and double check. You should be able to see the Nike on my screen from the Schwab interface. And thank you, Gib. Says he can see and await answers. Okay. So Barry as well, thank you very much. Really, we've just got a few of you here so far. Looks like a couple of people may be coming in. We'll get some more rolling in as we get things rolling. But as always, excited for this session and the opportunity to visit with you about what's going on in the market this week. As always, just ask a couple of things. We do want to have an open conversation, and with fewer people, I think this becomes a little bit more important. It's a little bit easier to do this when we get a couple of dozen people in the webinar, but with sometimes just maybe a half a dozen or some of those like we've had the last few weeks, it becomes even more important to try to encourage an open conversation and discussion. So a couple of different ways we can do that. Of course, if you don't mind speaking up, you can turn on your microphone. I've unmuted everybody in the GoToWebinar software. Go ahead and offer up a comment, an opinion, or a question, whatever you have. That way we can have a nice, excuse me, have a nice active conversation and discussion about what we're looking at. Also, feel free to use the questions panel as Gib and Barry already have. I'll be paying attention to that throughout the course of the webinar as well. So whatever your preference is, however you prefer to interact with me and with the group is great. But I'm always excited for this webinar and the opportunity to talk about the market and with everybody and get your perspectives. Go through some of the open trades that I have and open things up to some things that you may be interested in as well. So with that, how's the week been for everybody? How are you doing?
Good morning, and it's a good week.
A little bit of relief after the initial panic, right?
It's
doing
just
great this week. I assume everybody.
I would think so with the way the market's been going, and that's for sure.
Yeah. Let's see. Gib says, do you or anyone have a recommendation for a trade tracking file? So Gib, I'm going to assume that you're just talking about a way to keep track of the trades that you place. I'm kind of I don't know, try to keep it as simple as I can. There are a lot of tools that are out there. Some brokers even provide some things on their own to help you do that. Of course, you can pull trade histories from any of your brokerage accounts. Excuse me. Besides those, I just keep my track record here in this Google Sheet. Whether you're doing it in an Excel spreadsheet or a Google Sheet or something like this, I do it in a Google Sheet because it's easier to publish my track record and make that visible for everybody that might be interested in it, especially since this is kind of one of the selling points for Rebel Income is to kind of give that kind of visibility. Hello, Jay. Hello, everybody else that's just come in. John as well. And Charles. I just try to keep it pretty simple myself. This is so this is how I do it. But certainly there's a lot of different ways you can approach it. So, let's go ahead and open this to the group. How do you track your trades? How do you keep your own personal trading ledgers, as they were?
I created my own spreadsheet is how I do it.
Okay, so not too different from the track record. You may have some other data points you're throwing into yours, but yeah, so basically your own spreadsheet. Jay is saying the same thing, uses an Excel spreadsheet.
Yeah, I have different columns, but
Mhm.
you know, some of the things that I try and keep track of, for example, is the percentage, annualized percentage my trade will bring. So I know that I'm meeting my goal.
Good.
You know, that kind of thing.
Yep. Jay says Excel can retrieve current data for each stock. So, you know, there's a lot of capability that you can plug into a lot of these spreadsheets. And again, it's really going to be a function of what is easiest for you. So.
And I also keep, what I do is I use this add-in called Stock Tracker that populates the current values for the stock price so that I can be looking at it on a daily basis or on an ongoing basis and be able to see where my trade is.
That's pretty cool. That's a functionality that even Excel didn't have just a few, excuse me, just a handful of years ago. So.
Yeah, that add-in is, you know, if you can get a free version, but it only gives you like 20 stocks or something like that. If you pay like $20 a year, then you get as many as you want, and you also get as short a time as you want. Like you can get it up to the minute.
Wow.
You know, so it gives you pretty close to real-time data, which is good. I only have it do every 5 minutes so it doesn't interrupt my spreadsheet so frequently.
There you go. Jay is asking if there's a link for that. So if
yeah, it's if you just go to add-ins in your spreadsheet.
I don't have the Microsoft Office suite on my computer, so
Oh,
I'm
okay,
not gonna
but
be able to
I think
demonstrate that.
is that an Excel document there that you have?
This is a Google Sheet document.
Oh, okay. I don't know if they have add-ins or not. They might, but I assume it would work the same.
They have
Yeah, right there.
extensions. Let's
Get
take a look
add-ins,
here.
and
What was the
then
name
just
of it
type
again?
in Stock Tracker. I don't see it there. Let's see.
Right. But it would be a similar kind of a function, Jay.
Yeah, so you would just type that in your Excel spreadsheet, and then it would come up. You would click on it, and you could put it as an add-in there. And then it's pretty it goes through and it gives you instructions you can, how you can add your stocks in there. The only thing is that you have to keep in your spreadsheet that you're tracking those costs. I created a separate sheet just to track the prices, and those you have to put them in order, in alphabetical order, in order for it to keep track. There you go. Stock connector, add in for Excel.
So I'm just going to go ahead and put this link into all right, I'm going to put this in the chat area.
I tried the free version for about a year, and then I got to where, you know, for trading, I needed to keep more stocks in there. So I just go ahead and pay the $20 or whatever.
Yeah. All right.
It's been very helpful tool.
That's a great tip. So thank you. Appreciate that, Ray. All right. Well, let's go ahead and get into looking at the market and talking about what's happening with some of the stocks that we're following. It is the 16th. That means it's the third Friday of August, and just kind of the way things set up, ended up lining up a number of different trades that are all expiring today. First is a put sale on Coterra Energy, which is a stock that I've used quite a bit for some previous trades. So let's go ahead and take a look there at that one. There we go. Now this is a stock that's picked up a lot of bearish momentum. We've talked about it in previous webinars, previous weeks. It's picked up a lot of bearish momentum, especially since the beginning of the month with its most recent earnings report. And this was a trade that I placed in the middle of July and was willing to let that extend across the earnings report. Excuse me. Stock dropped all the way down to a little bit above $23 after that earnings report, and it's been rallying a bit, but still I sold the $27 strike price, 30-day expiration on the trade, and it looks like I'm going to be taking that assignment unless somehow it picks up about $3 of bullish momentum in the next couple of hours, which is unlikely at this stage. But I'm also okay with this $27 assignment price, even with the stock down at this point. So my normal intention here is just to go ahead and buy that back, or excuse me, is to go ahead and accept that assignment. If let's face it, if you're looking at this trade today and you didn't want to take that assignment, the smarter thing would have been to try to get out of that as soon as it started to really pick up a lot of bearish momentum, right around here, and try to jump on closing that as quickly as possible to limit the potential obligation. As it stands, though, I'm going to go ahead and take that. I am going to be down, just if the stock stays exactly where it is right now. As soon as I take that assignment, I'm going to be down $3 per share on the stock. So it's going to have to pick up quite a bit of momentum to make up that difference. But this is a company that I really like. I really liked it at 27. 24 is obviously a little bit below it, but the value proposition is still really attractive. And so I'm going to go ahead and let that play out. And I'm okay holding on to this one for a little bit and using that as kind of a I mentioned in the post that I made yesterday that the energy sector is one of the few places that are left right now where the entire sector itself isn't just completely overvalued. And that means that on a very selective basis, there's some really nice values to be had in the sector with some of these trades. And so Coterra is one of those. All right. There's also a covered call that I placed on Conagra, excuse me, a couple days later after that Coterra put sale. I was assigned this stock, here we go, back in July, or excuse me, in June at $30 per share. It sold the same strike price. So if assuming I get called out, I'm going to be called out at the same price that I bought the stock at, but that's okay. I'm comfortable with the premium that I brought in, a little under 3% on the put sale, 1.5% on the covered call. And so if I get called out, that's okay. If I get if the stock is below that, that's okay too. Let's take a look. Okay, got a little bit of lag in my internet feed, it looks like. All right, it looks like the stock is up a little bit today. It's just a little bit above 13, a little bit above 30, excuse me. And that's one that, all things being equal, if it maintains the price that it's at, I'll go ahead and I'll get called out of that position, and that's okay. That also would kind of offset the potential expected assignment I'm going to take on Coterra. So in terms of maintaining flexibility in my account, you know, I'm taking on an assignment and I'm getting called out of another position, and so the two are close enough in price to kind of offset each other. Antonio, what scares me on CTRA is the 50-day cross below the 200-day moving average. The trend, Antonio, on Coterra Energy, there's just there is no other way to there is no other way to stop to describe it. It's down, right? Bearish momentum. I keep doing this. Bearish momentum on the stock is definitely accelerated, and it's got a long way to go just to make up. It's still got a long way to go just to make up the difference between the gap that happened, you know, from the earnings report from here down to here. It's made up some of it, but you know, if you follow normal technical precepts, when you see this kind of an accelerated move in a very short period of time, a normal retracement back against that gap. This is true whether you're talking about gaps to the upside and then the stock pulls back a little bit from that, or gaps to the downside where you see the stock rally. A normal next point of support or resistance in this case, since this was a downward gap, is going to be about halfway between the extremes of where the gap started, where it ended. That's going to be about where this blue line is. So the stock is approaching that. It's even come up against it a couple of times in just the last week. So this could stay down for a bit, Antonio. I agree with you there. I think it's certainly not a given that it's going to get back to 27 anytime soon. But as I mentioned, this is a stock I like, pays a healthy dividend, and that's you know, that's enough for now. This is one I'm willing to hold on to for a little bit if I need to. So, all right. Go back to Conagra again. Anybody else that's on either one of these trades has a comment or a thought about them so far?
This one pays a nice, healthy dividend.
Yes, they do.
And this one as opposed to Coterra, everything's turning to the upside.
Well, and the consumer staples has, one of the things I've talked about this for actually a few years now. I like consumer staples, especially when I think that the market is going to be uncertain, because it tends to be a little bit less cyclical, right? And that's one of the things that the market has been concerned about now for a couple of months is, you know, have interest rates been high for so long that now, you know, consumer prices are elevated to the point that they're really starting to restrict budgets. And that is something that puts pressure on cyclical stocks, including stocks in the energy sector, for example. But there's a lot of other sectors that are very, very sensitive to interest rates. Consumer staples, not quite so much. It doesn't mean that they can't be volatile, but they tend to be a little bit less sensitive to those kinds of pressures because demand for these tends to be pretty consistent. Even if household budgets have to be constrained a little bit more, you still have to be able to put food on the table, for example.
Yeah, no, on the dividend stocks, as mentioned, looking at the earning stability to me is one of my merits. And Conagra, an earning stability of 9 is phenomenal, where Coterra was, I think, 74 on what the ratings that I looked at. But that's, I mean, Conagra, and you're absolutely right. Long trend, it's not very volatile.
Right. And so this is definitely not one of those stocks that you're going to be working with if you want to try to focus on growth and momentum kinds of driven strategies. But I've used Conagra quite a bit over the last 5 or 6 years on a number of trades, and it's worked out. It's worked out for me pretty well in just about every single case. And so, the fact that this thing does ebb and flow, I can't ignore that. Here's a drop from about 41 all the way down to 26 in 2023. So these do happen. So you don't ignore those, but if at the points where it reaches attractive valuations, there's usually some room to work with, especially on the sell side of the options market. So, all right.
A quick note on the swing trader.
Yep.
I'm looking at that one, and it looks like, as a chart, it's a beautiful chart, and it just formed a cup. It's at the bottom of a trade zone that it was doing in before, back in 22. And if again, this looks very good that it within the year or so, because on a dividend stock, you don't look at it as a 2 or 3 week or 2 or 3 month trade at all. You look in the long term, and
right.
to see this one coming back at the highs that it was before in the mid 30s is really not improbable.
Right, and that's where the fact that it is down in the low 30s, was down in the high 20s for a little while, that's actually something that becomes more attractive in those kinds of cases. Again, it's a modification and understanding of how to work with different stocks under different circumstances. But technically speaking, I don't see a lot of upside in this stock above about 31.50, which is where this red retracement line that I've drawn is, connecting some pivot activity, back here. What's this, about August of last year, with March and April going into May of this year, and then more recently right here. So, we've got some pretty significant resistance at these points, but again, technically speaking, if you want to talk about growth or momentum, if we see it push above 31.50 and stay above, kind of follow, if we get, something like this. I'm just doing a couple of, we see something like that from candlesticks, where we see it push up above and then follow through a little bit. There could be some additional upside here above this into that mid $30 range that Antonio was talking about. So, okay, that's Conagra. Excuse me. Another one that's on deck for expiration, again, talking about food products, is Kraft Heinz, KHC. Again, this is one that's this has been a 3-week trade. I brought in about 2.3% on the put sale on this one, 75 cents, which was pretty nice at the 32.50 strike price that I sold. And even with the fact that the stock has picked up some bearish momentum here over the last couple of weeks around its earnings report, it's still very nicely above 32.50. My assignment was all the way down here. Talk about timing a little bit. The point where I placed the put sale on this one was, right around in this area. So this was, pretty nice little bullish level 2 pattern, because we had the 20-day moving average starting to turn. The 20-day moving average kind of starting to flatten, and got some impressive, some good candlesticks implying some pretty good momentum on this one around where I placed that put sale. So that pushed the stock all the way up here to 36, and as I mentioned, it has pulled back from that point, but that created a lot of distance, gave this a lot of room to work with. So that's worked out pretty well. really no reason to, at this point, to do something different other than letting that expire. But as always, we want to consider the possibility of other strategies here. You could have done this truthfully anytime in the last couple of weeks. These options for Kraft Heinz would have been pretty much worthless at $32.50 if you wanted to think about trying to roll the trade. It's still far enough away. I have to expand my options chain. But here's $32.50 now. Asking price is 3 cents. I brought in 75 cents. So, you know, that's obviously nice being able to hang on to 90% or more of the premium that I sold. As always, the question of whether or not to roll isn't just about what the stock is doing now, but you know, are there attractive premiums that are available within a reasonable period of time? And are you willing to work with the stock if it has rallied? Are you willing to work with it at a potentially higher price? This is kind of interesting. From August 30th, kind of an interesting difference here. 34.50 can get 49. But for the first week in September, now we go, instead of every 50 cents on the increments, we go to $1, 33, 34, 35. That changes the pricing dynamic enough here to make, you know, rolling out into September a little bit more complicated. You have to think about, you know, is 42 for the $34 strike enough? Or are you willing to be aggressive enough to think about maybe the $35 strike price? Go out to the first week of September, here you can get 85 cents for that, but that is going to be, you know, in the money. So there's an increasing chance that if you place that trade that you're going to be assigned. Do you want to work with that, as some of the more aggressive sellers in our group have done in the past, and then try to take advantage of bullish momentum? If the stock is holding at the 20-day moving average right now, it looks like it's starting to bounce up a little bit. If it continues to show that momentum, is that enough to make you think about maybe selling a little bit in the money and betting on a little bit of a swing so that you can manage the trade on an active basis, maybe buy it back for half of what you're able to sell it for? Maybe. Personally, I think there's better premiums available out there right now than to try to be a little bit more aggressive with Kraft Heinz, but that's me. Antonio, I think KHC will continue great cup with handle. As you said, consumer staples, but barbecue season ending up north. I don't know, maybe. We're not quite into the cold months yet. We still got a couple of months, so I don't know. Antonio, you're further north than I am, so you can speak to habits up in your area. I can say here in Utah, we've got a lot of diehards. We'll smoke meat and we'll barbecue out in sub-zero weather if we want.
Well, I grew up in the heart of the prairies in Saskatoon, Saskatchewan, and let me tell you, when it's a minus 30, and minus 30 Fahrenheit, it's cold. You don't barbecue. Yeah. Now being out here on the west coast on Vancouver Island, I'm fortunate. I can barbecue most of the year round.
There you go. Let's see. All right, let's catch up on a couple of these comments. Antonio, let's take a look at Broadcom really quickly. It says the AVGO trade talked about a few weeks ago. Curious how this bullish week works out for the option trade. So certainly it's been picking up a lot of momentum here on the upside over the last couple of weeks. nice bounce off of the 200-day moving average to extend that upward trend. You know, is it where is it going to find resistance is really the question at this point, because it's really just broken through multiple levels, right? Here was resistance, it shot right through that. I would have expected resistance here at 160, but good heavens, it gapped above that yesterday. So it's moving pretty nicely. It's probably got some more resistance up here around 170. Is that where it starts to break down a little bit again? Or does it continue to push higher?
181.25. If you look at that top, is now the range seeing was 181.25 down to, wow, 138 basically. That's quite a range.
Mm-hmm.
Yeah, the 140. That's quite a range.
Yep. Yeah. So if it does start to retrace a bit, I would be looking probably at 158 as immediate support. This would be the closest level of support. I'm guessing at the number here, but about 158 roughly. Remember, this is an area rather than a specific price, so it should see some support somewhere between 160 and 158, I would expect. If we see it pull back and then bounce higher again, then that starts to look like a good continuation pattern that should help it continue to extend a little bit further, challenge this high at 180, and see if it can really extend the bullish trend even further. But it's certainly got some room to go to do that. Certainly some time to see how that plays out. Barry, unless someone drops the ball, I'll be called out today on his CCOI $65 call. Cogent Communications. On July 11th, when it was trading below 63, I was assigned at 65. Well, I'm really sorry for your suffering, Barry.
Wow.
Signed at 65 with $1.55 in premium, but he's brought in additional premium of $2 and $1.80 on 2 call sales and $97.50 dividend. So can't complain too much. Probably get back into it with a significant pullback. So this is kind of like Broadcom, where it's really just picked up a lot of bullish momentum, right? So, you know, this is about where Barry's talking about roughly. You know, in the $65 range that he's been working with. This is where he was assigned.
Oh, you give me grief for parabolic, but not Barry, eh?
Well, it's it is going parabolic. There's no doubt. However, this is rather than approaching it strictly from a growth standpoint, Barry sold the same strike price for the call as what he was assigned at. So he did what I did. He did the same thing that I'll do with Conagra and some other stocks that I've used in the past, Zion recently, right? And just focus on the income side. Brought in some really nice premiums on this. This is one that he's had since April. So actually, let me go back. His assignment was back here in this neighborhood, also 65. My lines are really ugly. I apologize, but he was assigned here, watched it drop, and then it's rallied here since then, giving him a couple of opportunities to work with covered calls during this period. Plus, he brought in this dividend. Looks like you'll miss this one if you're going to get called out today. But again, let's just talk about the numbers here for a second. Give me just a moment. Brought in $1.55 on his put sale. Other covered calls, he brought in $2 and $1.80, right? So based on the 65, that's a little under 6% that he's made just in income. Again, this is since April, so about over a 4-month period. Multiply that by 3, or about 18% annually. That's not terrible, even on a stock, even on a stock that's a little bit volatile like Cogent. Plus the 97.50 dividend. You know, we've got that right here, 97 cents. So let's add that to our, oops. Plus $2 plus $1.80. All right, now we divide that by 65, a little bit under 10%. So that's not bad. And that's you know, sitting and watching the stock run through a period with quite a bit of volatility, especially volatility that went that did not go your way, right? Watching it drop all the way down here into the low 50s, that, you know, that's the kind of thing that's not a lot of fun to watch. So, but that's a nice result, Barry. Overall, you're doing pretty well. And that is a nice dividend. This is, let's take a look here, dividend yield. Yeah, look at this.
5.3.
Yep. That's nothing to sneeze at. Oh, okay. He says brought in $1.80 on a $75 put sale on PII. Polaris. Nice. All right, Barry. Here you go. You get 2 of them. He sold the $75 strike on this one down here. That put sale expires today. It's picked up some nice positive momentum. Be interesting to see, you know, I've not, it's been a little while since I did any analysis on this stock, but it'd be interesting to see how the fundamentals shake out right now with the latest earnings data that came out late in July. So this is an interesting pattern technically, isn't it? 200-day moving average starting to flatten. Here's our nice little bowl shape on the 20-day moving average. It's flattened a little bit lately, but starting to rally, and we're seeing the distance between these 2 moving averages is really starting to narrow as well. So if this bullish momentum continues, it looks like it may be starting to set up a little bit of a consolidation period here. We've got support probably, what is this? Probably about $78. Resistance up around 85. It can probably consolidate within that range for a little while, considering the length of the downward trend. But if it does, that's not great for growth investors, but for income generators like us, you can make a lot of meals with consolidations like this. So that does look very interesting, Barry. All right. Oops. Let's see. The last position that I have on deck for today is Nike. Sold the $75 strike. Some of you may have also been in this trade with me. Let's check in on that one really quickly. This is, you know, Antonio, I tease you about going parabolic. I'm not opposed to them. And Nike has kind of started to do that. It's still got a long ways to go. Again, talking about filling a gap, right? But the interesting thing about it is that with it approaching $84 right now, it is looking like it is not quite to half of the way to filling that gap. May have a couple more dollars yet, but if it can push above, the 50% of the gap level, then we should see upside all the way up here to probably 89, maybe 90. So we'll see.
So on the swing trade, this is awesome. The Nike, after its big drop, I
Yep.
have a 9, a 21, and a 50 and a 200. So it after the big drop, it tracked the 9-day all until the 21 caught up, and all of a sudden now all two have crossed, and now it passed the 50 and reaching for the 200, and it looks like that's where it's going to get to. Yeah.
Mm.
In a swing trader, to me, this is a 15-20%, hopefully in 2 to 3 months or less.
Yeah. Yeah. So it's got some momentum here. We'll see if it's able to reclaim some of these previous levels, or even to break above the 200-day moving average. If it gets up here to the 96 range, where the 200-day moving average is sitting, I would expect we may see another period of consolidation here in the mid 90s again.
The way I go is it a head fake or is it go? And if I put my stop hit at the right, well, I still mitigate whether I was right or no, not yet.
Right. And if it is reaching that 50% mark of the gap, again, the technical idea here is that stocks traditionally fill about 50% of gaps. So we're starting to approach that level now, right? And so the momentum we've seen here is nice, but it's also entirely possible that up here doesn't even happen. It's entirely possible that we see the stock hit resistance. I'm just going to go ahead and say, let's see, what is this, 92, maybe 77, so about $15. 92.85 roughly. We're getting really close. 50% is right about here. I'm going to call it $85. So if it hits and drops back down, that's kind of a bummer from a momentum standpoint. At the same time, if we come down here again, we see it retrace and maybe begin to consolidate again. Here's something that is really, really nice for income generation. So we'll see. We'll see where that goes. Let's see. Barry says these instances are why you can't get too down when things like BMY happens that I mentioned a couple of weeks ago. And you're exactly right, Barry. I appreciate that. Picked up quite a bit of momentum after having fallen, and again, we're seeing some consolidation going on right here, right now. Don't get too down on it, and just try to sometimes letting time work itself out. It's also why, for example, Coterra, I'm going to be assigned $3 below the stock, or $3 above the stock's current price, right? So I'm going to go into the trade in the hole. Don't love that, but I'm also willing to be patient with it because this is a stock that it's a company I like, and that mindset you're talking about, Barry, is something that is important when you trade the way that I do, and when you look at when you treat put selling as an opportunity to own stocks that you like. So
Would you compare Coterra to, say, Fang or Venom?
well, I mean, different sector, right?
Right.
So you're talking about very different dynamics to what you'll see from, you know, any of the Fang stocks or the Mag 7 or anything like that.
No, when I said, sorry, when I said Fang, I meant Diamondback Energy, or Venom was Viper Energy. I thinking the ticker symbols. My bad.
No, I'm the one that went to the the pop culture references here. So Fang, this is interesting. Again, these are stocks I'm not familiar. I haven't done a detailed analysis on these in quite some time, so I can't speak to fundamentals, value proposition, etc. This is a very different pattern though than Coterra, right? Coterra is clearly in a downward trend where Diamondback has been following a very, very nice upward trend now for, well, all the way back to 2021. I don't know how overextended it is. I'm going to assume on that basis that it's probably a little bit overpriced. But that's got a very different technical pattern going on. And there are a lot of stocks in the energy sector that are also showing very different patterns, but their valuations are also pretty different. Here's Chevron. It's about similar kind of pattern as Coterra. Take a look here, Exxon. Marathon has been holding up pretty well. Here's another one that I like. Yeah, Enterprise Partners has been holding up pretty well. Energy Transfer, which we've talked about in the past, again, another one that is following a very nice upward trend. So there's some divergence in the energy sector. Here's Suncor. I mean, talk about going parabolic after an earnings report.
That's a good Canadian company.
This is another one that I like. I like this company. I like this stock. You're not going to see me looking for a put sale on it right now. Not the way that it has. Not the way the price has extended itself. But if it retraces a little bit, I might, depending on what the rest of the numbers look like. What was the other one you said? Venom, VNOM.
VNOM. The reason I like FANG is its stability is in the mid-level, which again, and maybe not as good as Exxon or Enbridge, or
right.
But its cash flow is quite large right now on FANG. Venom is still again, it's a little on the high side right now and overextended, I think, but that's why when I looked at FANG, I thought that was my favorite one to look at. And again, like your Enterprise, EPD, ET, they're all solid
right
returns.
Yeah, and so thank you. I appreciate that. And there's, we talk about cyclicality, and energy does tend to be a little bit cyclical and sensitive to interest rates. But then within the energy sector, there are also some sub-industries, as it were, and stocks that fit into some of those sub-industries that tend to be have a different kind of characteristic. That's why I like paying attention to Enterprise Products Partners, and Energy Transfer. I think Diamondback kind of fits into a little bit of a similar niche where it's not that they're completely immune from cyclicality of economy, interest rates, et cetera, but where they're dealing with a lot of the transportation and storage facilities, kind of the infrastructure that supports the energy industry, there's a different kind of dynamic there. And that's why, Antonio, you're talking about stability of cash flow, right? It's where these companies tend to stand above some of the others that are a little bit more, get talked about a little bit more, get a little bit more buzz. So Murray says, yeah, Bristol Myers is the one I was called out below my assigned price by a good bit. And that is the thing that you have to be careful about if you're going to be selling calls below the price that you were assigned a stock at. That's taking a very aggressive approach to income generation. And it just means you do have to be ready to manage those trades actively and understand that sometimes you may get bit on it a little bit. So, all right. Well, let's open this up a little bit. Let's got a few minutes left. Antonio's already given us a couple of other things to look at and think about, and I do appreciate that, as always. Even some of your parabolic stocks, Antonio, they've still got some of them have still made it onto my watch list just because they're interesting companies.
Well, Enbridge, E&B.
As always. Wow, look at that. It is dropping a little bit though right now. Have a little bit of a gap. Right, so that's kind of interesting.
Well, I just got my paycheck for the dividend, so.
Gosh darn it, that had to be frustrating. I mean, that's a talk about a healthy dividend. This is where some of these companies that have the stable cash flows that you're talking about, if you like the price that you're able to buy those stocks at, whether they go parabolic or not, that becomes a little bit less of an issue. If you have consistent cash flows, a healthy dividend, these almost start to become, not talking about price stability of the stock price, but they almost become proxies or replacements for bonds, where a lot of people, you'll hear about the flight to quality and people try to go and start buying treasuries when things get uncertain. You can find companies that have some of these stabilizing factors fundamentally. It doesn't mean the stock prices won't be volatile, but if you really believe that there's a really good value proposition at the price that you bought the stock at, and you have that you have a nice dividend to go on top of it, that gives some, that gives you a nice way to still be able to generate consistent income that is going to be pretty competitive, if not above what you're going to get from treasuries or other more conservative interest-bearing securities. So that's very nice. There's a couple of other parabolics. You're saying, Antonio, these don't offer options, is that right?
I'm not sure. I haven't actually looked for the options in both of these. They're very Aspen I've been in for a while, but the other one I've been in for a couple of weeks, but it's I haven't looked at the options on these.
Considering where this one started the year, it would not surprise me if it doesn't, if AST Space Mobile doesn't have options, but ASPN maybe a little bit more likely. That's interesting. Again, neither of these pay dividends, so all things being equal, you're not going to see me use these in any kind of a rebel income focused trade. But
when I first started, I was doing a lot of that swing trading, and
yeah,
I'd have big wins, but then I'd have big losses.
Right.
So eventually I just gave up, and the options thing really worked a lot better for me.
Yep. So this one does have options, but only on a monthly basis. So that's interesting.
Couldn't agree more with Barry. You just got to be, you have to be following. You have to be tight on what you're mitigating for, and yeah, they can get quite volatile, but you
Absolutely.
can get some nice ones. And if your conviction on like the Space Mobile one, it's the story behind it. They haven't even put one of the satellites up yet. but as the projected and the investments are great. Curious on your energy, so much seems to be shifting more to the electrification and utilities as opposed to the oil and gas scenario, even though my Enbridge's pipeline is good.
Right. Well, yes, there is an increasing push towards electrification. The irony about that is if you actually look into and I'm not just talking about electronic vehicles, but electrification in general. A lot of the things that facilitate more electronic power, there's still not the same reliance on crude and oil products, but the two were still very, very much interconnected. And so there's you never totally get away from it. But AST Space Mobile, this one is interesting. I'll take back what I said because they actually offer weekly options. I still won't be highlighting this on any kind of a put sale. I can't speak to the fundamental strength or weakness, but these are, I mean, good heavens, you're getting more than 10% on a put sale. Not a recommendation to buy or sell, but here's the thing. This is the other thing I'll say about this. This looks tempting because you're getting more than 10% for 2 weeks worth of time, right? That looks really enticing. $250 for a week. Typically, and again, I have not done any analysis on this, but it's very close to 30 right now. And there is usually a reason that implied volatility in options is this exaggerated over such short periods of time.
I've been short selling those types of stocks.
Yeah.
The reversals.
Enlighten me, please.
And at least some of that, I can guarantee you at least some of that in the case of ASTS is because of the way that this thing went. Just kind of tracing down here around 2, all of a sudden went like this, and now it's going like this. That parabolic nature, I can guarantee you that a lot of the volatility that you're seeing in the options is coming from not only the increase in volatility as the stock has rallied, but also as people are betting on the flip side, looking at this and saying that can't continue. It's got to retrace at some point.
Yes,
how far that's going to go, it's anybody's guess. But you've got a lot of speculation.
When it starts to retrace, when I short sell those.
Yeah. So very interesting. All right. Well, as always, lots of food for thought, lots to think about, and appreciate what everybody's brought. Antonio, as always, I like to see. Like I say, I tease you about the parabolic stocks, but I'm not going to lie, and it's not just Enbridge. Sometimes there's some really good companies that you bring up, and they become worth paying a little bit more attention to. So I appreciate that. I appreciate what everybody brings to this webinar, and I appreciate your participation. I hope you have a great weekend. If anything does come up that I can assist you with between now and next week, don't hesitate to let me know. Thomas@investive.co is my email, as always. Otherwise, I will talk to you next week. Thanks, everybody.
Have a good week.
Thanks, Antonio. You too.
Happy trading, everyone.
Thanks, Ray.